Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi as well as Nikunj Dalman. For another market is holding on to the green. Yes, we are off the highest point of the trading session because at one point of time we were very close perhaps to make that all-time high level, but we have ebbed off from those levels right now below the mark of 22,500. Having said that, there are pockets of outperformance today. Take a look at BSU banking names. In the last few minutes, there has been a bit of a perk up on the likes of PNB. UCO Bank has actually managed to move up. Central Bank, IOB. These are some of the names, including the heavyweights like SBI as well, that have managed to see a solid surge across the board in the last few minutes itself. So, good amount of momentum at play as far as the PSU banking space is concerned. IT sector has been strong since the word go because CLSA had also come out with an trade on the sector, and overall the expectations are muted, so any outperformance if we do see starting next week in the earnings season could have a positive. TCS is one of those big outperformers today. Telecom space is also in focus. Bharti Airtel has been in focus, of course, on account of the Bharti Exim IPO as well that starts today. The subscription has been quite steady. Vodafone continues to be in focus on account of that fundraise that they are planning. So a lot of these buzzers and movers, and one can't forget the entire shipping space, the shipping defense names the likes of Mazgaon, Cochin, Garden Reach, they're all up between 8 to 15%.
Oh yeah, holding out very well. It's important also to take cognizance of what the global setup is looking like, considering that's the one which sort of backtracked us to start off trade with. And look at Europe, that's pretty much a mixed bag. FTSE lower by about 0.5%, but marginal gains actually coming in for the FTSE MIB, the DAX, or for that matter, the CAC. And the pre-market rates for the US future, a little change, largely flattish, while they are hinting towards another down day, but it's not a deep gash as you saw overnight. So stability, and for us, really a show of resilience.
Aisha, you've done much better than the global markets. You've had global markets which have been pegged back for 2 days on the trot, but you've done rather well, independently. Now, the point to ponder over is that the mid-air turbulence or the mid-March correction what we saw, is that enough? Because that's the time when Indian markets corrected, global markets were in ship. So are we likely to react to global market correction, or are we likely to move on? Second, we are no longer in that so-called sweet spot with crude now almost at 89 and bond yields threatening to go to 4.5, and with dollar index at a multi-month high. You can't say that, it's a very sweet spot. Some adjustment here and there, one bad day or one big spike for crude, one bad day for the dollar index, uptick in volatility, that is something which cannot be ruled out. So that is something you need to be a bit cognizant of. But I think in the mid and the small cap space, if there was fear of a meltdown, now there is fear of FOMO. For the crowd which sold out in the month of March and which was justified because market sell-off was very extreme, now that same crowd seems to be saying that, okay, why did we sell? We shouldn't have sold at all. It's a bull market. We should have taken chips off the table. If we had margin positions, we should have put in more money. So that FOMO crowd is back, and nothing on the volatility front has come so far which could be called as very damaging. If at all, I think full credit to my colleague, Prakash, for breaking that story where we did a story source based that the government is against any kind of regulatory intervention. And just a coincidence that after we broke that story, small cap stocks have been up from the word go, and there you go, the small cap index is up another 1%. Pramod Amte joins us, head of institutional equity with InCred Capital. Pramod, for the market where the March correction was justified as logical and was justified as something which was a needed correction, now that market has recouped almost everything lost in the month of March. So do you think markets are getting bloated again?
I think if you look at the index levels, you are right saying that the recovery has been much quicker than anybody expected. Having said that, there are definitely pockets of stocks which are still down in the high double digits, which you can justify saying that there have been event-based reactions. But if you look beyond that, I think there is definitely still a value emerging in some of the mid and small caps per se than the broader index on those mid cap or small caps.
Pramod, what's the view on public sector banks? Because time and again, these stocks have been coming up. There's one day down, one day up for these names. What's the view with the public sector banks, and any top bets that you have there?
So we remain very selective in the PSU bank space. Our preference remains with SBI, the big brother in the space, and especially considering the deposit mobilization capability, which gives them an advantage over the rest of the private sector, is where the relative positioning is better for us versus the other PSU bank names.
Right. Okay, that's the take coming in on PSBs. Let's mark what the color of the market is today and what's actually holding out. Some of the mid-cap pharma names are holding out very well. Of course, Laurus Labs is holding up 6%. Amongst the benchmarks, you've got a Divi's, which is the top mover today. And sporadically, you are seeing dots of green all across the pharma pack as well. Some of the other stocks will also just come up for you on your screens. Besides that, there's Manappuram. Escorts is holding up very smartly, 4.5% of an uptick. Petronet LNG is higher by about 4%. GNFC as well, which is now marching towards a 5% gain. Taking a little easy now for the real estate index, and especially the two names were the sort of flag bearers the last two trading sessions, both Godrej Properties as well as DLF. They're the ones which are receding today, about 3.5% of a dip coming in. Nestle, Dixon, these are some of the other names which are seeing some red marks for themselves. Within the Nifty, once again, L&T, Kotak Bank, Bajaj Auto, Reliance is down 1%. So some of these names are, turning out to be a bit of a drag. And then underperformance and non-performance, I should say, from ITC and ICICI Bank, even HDFC Bank, which is a little soft in trade today. So they're not quite participating in today's move. Naresh, let's just get your sense of, on some of the charts from within the pharma pack. They are the ones where all the action seems to be today, be it a Divi's or a Laurus.
So, Laurus looks interesting for the fact that finally the stock has crossed a recent swing high. It's given a small range breakout. The recent swing high for the stock was around 425, 427 levels. The stock has crossed above that, and the last 6-month highs are around 444, which it came very close to today. If it sustains above 440, 45, that would be a much bigger breakout and open up upsides to 500 levels. Divi's Lab, on the other hand, has been sideways for the last almost 1.5 years. So I would wait it out. It has a lot of resistance around 3,800 to 4,000. So at current levels, risk reward is not great. So Laurus looks interesting as of now from the pharma pack.
That's the view coming in on some of the pharma names right now. But in terms of the other big winners, as we were talking about, of course, the shipping companies do well, but it's the real estate pack which is seeing some sort of profit booking. So Macro, Godrej Properties, DLF, all of these stocks are under pressure. From a medium-term point of view, what's the bet on real estate? Can somebody enter afresh, or it's time now to book for the people who already had positions there? Pramod, the question is for you on real estate.
Sorry, there was some intermittent connection challenges. So clearly, with regard to real estate, it has been one of the best performing sectors for FY24. And considering the type of stock moves and the asset price moves in the financial year, we took it off from our investment theme in the month of February. We stay out of any related either direct real estate plays or even to that extent some of the construction material space, including tiles and others, where I think the weakness has been clearly seen versus the new home sales. So we are staying out of that sector considering the risk reward is not favorable at this juncture.
Right, okay, that's the take coming in the real estate pack. Just scouting through some of the other names as well. JSW Energy, of course, after the QIP news, that's one stock which is in focus. And then, of course, Anisha, interesting note from the house of CLSA on IT. A bullish undertone, one would have to say. Selectively, of course, a sell as well coming in on an LTI or a Wipro.
Yeah, but they haven't upgraded their earnings estimate by a whole lot, and most of the companies have been upgraded from a sell to an underperform. So it's not an outright buy coming in, yes, apart from Tech Mahindra. So maybe incrementally things will look positive, but it's not a runaway rally perhaps. That's what CLSA means to say with that note. But yes, JSW Energy 6% higher. I have to say a bit surprised by that move, because the QIP price, the floor price, that is $510 versus 560 that the stock is trading at right now, and it's a sizable dilution, mind you, 6 to 7% dilution. So a good move, clearly telling you there's a lot of interest for people to put in money there. And the other names also include like Manappuram Finance. In fact, Kunal, what's the view on these charts? JSW Energy and Manappuram Finance?
So, Manippuram Finance is something which is looking very attractive. In fact, after this gold price rise, this is the first time when we are actually seeing a high correlation coming back or a positive correlation coming back for Manippuram Finance. The stock finally breaking past about that 188 resistance, and in that process completing a swing breakout, a potential swing breakout if it closes above this 188 mark today. So that could probably indicate that this could be a fresh multi-week breakout for Manippuram Finance. So looks attractive in that prospect. And even for JSW Energy, I think today what we are seeing is yet another day of price volume breakout. And in the last 4-5 months odd, we've seen multiple times that whenever the stock is coming out of a consolidation, it tends to channel up higher on the back of higher volumes, and then with slow drift or slow movement on the upside, the stock tends to move up and shifts the on the higher side. So from an earlier breakout point which was closer to 450-60 in the month of December and Jan start, the stock has now moved higher to almost 575-580 levels. So which means now we should be looking at 630 to 650 as a fresh target for the stock.
Right. Pramod, wanted to get your thoughts in on the entire energy basket along with its ancillaries, of course. Even JSW Energy, the QIP and the way the stock price has moved today is clearly telling you that irrespective of the quantum dilution, it will have appetite and will find buyers.
I think energy has definitely played out substantial positive momentum in the last, I would say, more than a quarter, as the demand growth has been relatively positive, except for February month, where there has been some weakness. But if you look at the broader parameters like PMI, manufacturing continues to scale up a new high, and the type of new investments expected to revive that power sector continues to augur well in the overall scheme of things. And there, our preferred pick is through the construction names than the pure utility names in the L&T and others, or the Thermax to that extent, where the comfort will continue to play through on the equipment suppliers is where we are placed.
Now let's look at escorts. It's the real outlier, so to speak, in otherwise very ordinary day. For me, what matters also is the fact that you've gone against the global odds. Let's look at global cues. Crude $89. Yes, sir. Brent is moving towards $90, and that it's not an alarm bell, but you tend to ponder over that what happens to the oil, which way oil marketing companies would move. Oil is going higher. No price cut. Are oil prices getting completely passed on? All that narrative around PSU will start. That's oil for you. Brent 89, highest since 30th of October 2023, which is almost like a 5-month high. It is up 19% from 2024 lows. Kunal, I mean, it's an extraordinary jump, 20% in crude.
Yeah, so
nobody's talking about it. I'm surprised.
Nobody's talking about it. And I think on the charts, I was looking at it yesterday, that 94-95 the previous swing breakout. This was, I think, in the month of October, November, where Brent hit that level, and from there it had gradually gone to a corrective phase. So I think we are just nudging or maybe nearing towards a potential breakout. I hope that breakout doesn't happen for Brent crude, because I think that could probably spiral up all the concerns for markets yet again. So that 94 level is something which is very, very crucial in terms of technical levels for Brent crude.
Today has come under some bout of profit booking. That for me is trend number 1. Let me look at anything interesting from the NBFC space. Aditya Birla Fashion, second day on the trot, it is moving higher. Yes Bank is up 3%. That's interesting. In fact, today, which symbolizes a lot of mid-cap stocks, they're doing very well. You've got Edelweiss Financial Services, PNB, Can Bank, good old Brightcom, Reliance Power, JP Associates. This is a FOMO crowd, guys. I mean, FOMO typically likes to feed on these stocks where the gains are, where stock denomination is low, where liquidity is large, and the spikes on both the side could be very, very big, considering that the FOMO crowd always chases momentum. Kunal, that FOMO word, is it really applying with the market right now? Because you see really the tail enders which have started batting now.
Yeah, so the mid-cap end is where I'm definitely sensing FOMO, because that's where there's a hurried price action for many of the stocks. So rarely do we see that in such a recovery stage. You see the 2-digit mid-cap names rallying up by a margin of 10 to 15%. So I would probably expect, yes, there is some sort of FOMO which is happening in this space.
And do you think the FOMO will continue? Could we crawl back to March levels?
See, if the quality of the stocks deteriorate and if these stocks move up by 10-15% on a higher basis on maybe consecutive days or consecutive weeks, then I think then we can probably expect that this is more froth which is building back again into the mid caps and small caps. But if there are quality names which tends to move up higher first and then it's followed by the tier 2, tier 3 mid cap, small cap names, then that would be a healthy trend in the making. So I think it all depends that over the next couple of days, do we see that the tier 2, tier 3 stocks leading up front in terms of price performance, or it's the larger cap ones or the more formidable ones across the space?
Okay,
Although
point.
it already seems like some of those scavenger names are the ones which are where you're seeing some action build up. I mean, look at a JP Associates. Our power, I think, is already locked in upper circuit. And I think these stocks have seen consistent such moves over the past few trading sessions. Yes Bank, etc. as well added to that list. But Pramod, what is it that you make of small caps in particular? I'm sure at your end as well, you've been sort of hunting the ground for opportunities. Anything that looks interesting?
Sure. Even though we have been cautious on smaller and mid caps, but we feel the extent of damage which has happened, there are still some names which give us better risk reward entry points. So in our high conviction list we released for the month of April, we have added 3 names into the same. So they are like basically where the valuations are definitely affected from the 40 levels of +1 standard deviation to either mean level or below mean. So the names are like APL Apollo Tube, where clearly capacity we feel will give a earnings boost both in terms of top line driven and the sales mix improvement. Whereas I would say the valuations are back to a mean level. We added Spandana Spurti in the small cap basket, where again the concerns about the some of the geographical exposure is overdone, and we feel again the valuations have corrected pretty handsomely. So we added that into a small cap. We initiated on Skipper, which is more on the power T&D space, and we added it into high conviction. So if I had to look at overall scheme of things, we added 3 names in this correction in the small and mid cap versus 1 name that is Titan in the large cap per se.
Vandana Spurti, Skipper, as well as APL Apollo Tubes are some of the recent buys coming in as far as Incred Group is concerned. But Pramod, what's the view on metals basket?
Metals, we are still concerned overall as a scheme of things. The way we are trying to play the metal space is we would like to play through the raw material, through the metals. So we are positive on NMDC, we are positive on aluminum as a metal, versus steel we are negative. So the type of recovery which is happening globally, we feel Western-led recovery is more positive for aluminum versus steel, where China continues to produce a large chunk and we haven't seen any relief, and hence the run-up in steel is going to be relatively difficult going forward, whereas the raw material iron ore is a better play to play the steel prices.
Why are you bearish on metals? The anecdotal data coming from China, the PMI data coming from China, the demand indicators coming from US, all of them are pointing to days ahead for metal demand. Pramod, why are you bearish on metals?
Sorry, I lost you on that. So if as I said, we are more selective on metals, and clearly the extent of it's not just the recovery in China, the extent of the steel production in China is still humongous. We don't see any relief coming from China supplies into the global steel market, and hence the benefits for Indian steel companies are going to be relatively smaller, and we continue to remain negative on broader steel names, whereas the proxy play there is more for us NMDC, where the prices are moving up and the production is also seems to be the continues to favor NMDC versus the steel names.
Identify 3 liquid mid-cap names for us which have emerged stronger after the March fall. Suresh?
So yeah, in terms of the recovery, sharp recovery on the mid-cap side, we are seeing it in PSU banks. A lot of these names have recovered back almost closer to previous highs. So if you look at it, Canara Bank is 1-2% away from an all-time high. You have PNB making a new 52-week high. And the second spot is metals, wherein across the board we've seen a strong recovery. We've seen Jindal hit a new all-time high. You have SAIL, which has hit a new 52-week high. So metals and PSU banking, although high beta, but they've had a very strong recovery, which generally is not the case after a correction. So on dips, I would continue to watch out for PSU banks and metals.
Taken. Kunal, what's the view on AU Small Finance Bank and IDBI Bank? Is there a breakout on the cards for AU Bank at least?
Well, that stock has been a huge underperformer. So, in fact, out of the few private sector banking names, for example, HDFC Bank, etc., very few stocks are reeling below their 200 moving averages. AU Small Finance Bank is almost at I think a 15% divergence, or rather still below its 200 DMA, even at current levels of 590, 600, where the stock is trading right now. So that's a huge divergence. So even if we see a rally, this could probably be a mean reversion of sorts for the stock price. But then I would probably look out for more volume accumulation happening for AU Small Finance Bank. So I think it's a stock which one should probably look out for just as a trading bet, maybe another 5%, 7% on the upside. Say 630, 640 could be a mean target which one could probably expect over the very short term. IDBI Bank, on the other hand, I think is something which has started to look very attractive because of the recent correction the stock had gone through. The strong support the stock has taken closer to that 200 moving average for itself, and then the breakout of the recovery rally for the stock. So I think in that aspect, that's a stock which is looking much more stronger relatively as compared to AU.
Nikunj, isn't it interesting on AU Small Finance Bank? Because, there was one point of time when everybody was very positive on AU SFB. There were these slew of buy reports coming in, and then suddenly things turned. And even after the recent acquisition, etc., it's just refused to move.
So last 3 quarters, they've disappointed both on the NPA front and also on the growth front. So what they projected in terms of growth, now they're claiming that they're consciously slowing it down in order to keep the NPAs under check. And B, if one really looks at the NPAs, also the NPA projection, which everybody thought that would really be under check. I mean, there's nothing alarming there, but those numbers in a sense have not really been very, very promising. So the stock saw an extraordinary run up. Same time last year after Sanjay Agrawal got an extension. And post that, it got through this mini re-rating, but then they have to expand now. The wall for liability continues. Their cost of acquiring assets, I think, is still under pressure, and that is largely because of what's happening to the entire liability franchise. So it had become an expensive stock. Price to book had gone to about 2.5 times, which frankly is high considering that large banks are trading at that kind of an level. So I think it'll take another quarter or so before this acquisition kicks in, before things really neutralize, at least on the cost to liability front. But they're building up a very technology and a very customer focused bank. So typically when these banks, they go through cyclical downturn, and when the going gets tough, that's the time you need to actually buy them. I mean, if you bought, let's say, some banks during the downturn, that's the time you actually rewarded. A classic point here is IndusInd Bank, Axis, or even for that matter, ICICI Bank.
Okay, that's the take coming in on AU Small Finance Bank. But let's shift focus, and while it's sweltering hot outside, there are some things one does savor every summer, and that's mangoes. But the good news is that prices haven't quite surged despite the fall in production for the start of the summer season. And traders are expecting prices to only gradually rise. So let me take it across to my colleague Astha and get a detailed ground report on what exactly can we expect this mango season.
Well, the summers are here, and so is the king of fruits, mangoes. That's right. We are at the APMC mango market, and you can see different varieties of mango which are filled throughout the market, starting from Alfonso, Kesar and Pyri as well. Starting with the demand is very, very much high as compared to last year. People are saying that they have to pre-book their mangoes to get their favorite variety of mangoes, and they have to pre-book several days ago to book and purchase the mangoes. Talking about the price, each variety have different prices, starting from Alfonso to Pyri, the small mangoes to big mangoes. They are starting from 800 rupees per dozen to 1400 and 800 per dozen as well. We are at the market, and you can see different varieties of Kesar mangoes, Alfonso and Pyri markets, which are bundled here at the market as well. And this market is also filled. People are coming from far away distances to take their mangoes as the summer season has started. But on the contrary, the retailers are saying that the production is low this year as compared to other seasons, the last year seasons. The production is way low and they have to sell with a higher rates in the market as the demand is very much higher than as compared to last year. Also, there is other side of the story as well. We talked to the farmers as well, and they said the production is way low. Earlier, they used to grow 50,000 mangoes per acre, but now their production has reduced to 20,000 to 25,000 mangoes per acre, and the production is going down because of the erratic rainfalls and the weather fluctuations. These are the basic problems which are giving which are impacting the growth of mangoes. So hence the retailers and traders are getting less production this year. Also, people are complaining about the varieties sold out in the morning, so they have to be in long queues and the waiting period to get their mangoes. Also, according to the traders and farmers, the demand will keep on increasing at the end of the April and May. And maybe the production, if the weather remains good, the production will improve and will be fulfilling the needs of the people.
Point taken. Asa, it would have been lovely if you could have got back some mangoes for us. We all are waiting here in the studios to probably relish on that. Aisha is a big fan of mangoes, and so are you, Nikunj, right?
Who doesn't like mangoes?
As in, you don't have a big sweet tooth, and I'm not a big fan of mangoes. I can have it, but not like, I don't wait like she waits for
The
it.
mangoes have come for the season. Why are you waiting? Mangoes have already come. Why are you waiting?
I'm not waiting.
As in, just have it in the studios, just enjoy it here. But that's the latest as far as the mangoes are concerned.
There is a big mango vendor outside Kunal's house. Do you know about it? Kalwa Devi has a lot of mango vendors.
Is it?
Yeah.
I'm sure everywhere across
Kalwa
Mumbai,
Devi has
there's
some
big trucks and big
Kalwa,
shops
and
that
are you
come
trying
up.
to say that you don't buy mangoes from Kalwa Devi, or you're not keen to get it for us?
I think there's something pending from your side first,
I don't remember.
which is still pending since last
Which is what I don't remember actually.
It's called Gopala Rasgullas.
I think we'll have to take
Gopala
this
Delhi.
conversation
Gopala
offline.
Delhi,
It's a long overdue conversation. I think within the meantime, let's take the closing trade picks, if not the food picks right now. Naresh, what's the closing trade idea?
So that would be a buy on Bank of India. The stock is on verge of a breakout above the recent swing highs. It has made a strong recovery after the correction. So expecting this to go towards 150-55 in the short term.
What are your closing ideas?
So I'll go with a buy on dips for AB Capital. I would still believe that after this 3-day consecutive move, even if there is a couple of days of retracement over the next couple of days, I think that should be taken as a good buying opportunity.
X is lying quiet, although off from the day's lows, but even off from the day's peak. But Trust Mutual Fund is venturing into the equity space now with a Flexi Cap fund, which is going to be launching come this Friday. Ankur Mishra, my colleague, caught up with the founder, Utpal Sheth, on their investing strategy.
We call it the terminal value investing methodology, where the focus is on trying to understand the long-term prospects of a company rather than the immediate prospects, rather than just the immediate prospects of a company. Towards that end, this terminal value is actually created by companies which do the right things, which have certain attributes, and we'll share those attributes. One is leadership, second is intangibles, and third is megatrends. However, whenever you find an intersection of these three attributes, you will find that those companies go on to become gorilla companies. They take away a disproportionate size of the value creation in that space. We would like to pursue such gorilla companies. But every company that we invest in is not going to be a gorilla company, right? So we are excited about the terminal value of such gorilla companies and hope to follow that investing approach. We have a very capable and committed team led by Mihir Vora, who's our Chief Investment Officer.
Right.
And in due course of time, you will see them following this in a disciplined and focused manner.
So this is what you have been starting in equity mutual fund per se. You have already been in debt. Now, in coming months or I say years, there will be more such funds which will come from your side?
There will surely be. We aim to ensure that we provide our investors with a bouquet of relevant investment choices. So there will be more funds.
Right. Talking about the philosophies of investing, you mentioned about Rakesh ji's philosophy as well. Does that also apply in the investing which you are doing right now?
See, I think Rakesh ji was one of the greatest investors that I have seen in India. In fact, probably the greatest. And I've been very fortunate to learn a lot from him. We all keep evolving as investors, and surely some of those learnings are learnings that I have shared with our investment team.
Right.
But at the end of the day, I think it is the decision of our investment team which matters. It's not right for me to comment on what they will be doing and what they will not be doing.
Okay. So one learning from for our viewers per se in Rakesh bhai's terms, if you would like to give.
Okay, many learnings. I will share a few. He said the greatest risk of investing in India is not investing in India. He used to also teach us that you have to lose many a battle to win the war. He used to tell us that investing is an act of wisdom, not just of intellect, and that your patience may be tested, but your conviction will be rewarded.
Devang Mehta, Director Equity Advisory with Spark Private Wealth joins us. Devang, good to have you back. Thank you for joining us. You're looking different today to me, are you?
Change the specs, Nikunj. Thanks for noting that.
I can see a lot of other things have changed, right?
It's probably back with a bang, and then so a bit of a happy face, I guess.
But even the bulls are back. Are they here to stay? What's your sense? You think it just a bounce in from March oversold levels, or markets have gone through their so-called corrective phase already?
So a very good question, Nikunj. I think what we have been noting and marking since last September, to be very precise, is that September, October, November, December, Jan, Feb, all these 6 months we had a sort of a bit of loss of momentum where markets corrected. Right, the large caps corrected a bit, mid caps and small caps corrected by little larger quantum. March the fall was a little severe, and by severe I don't mean that of 15-20% type of fall on the index levels. Yes, a lot of stocks corrected by 10, 15, 20, 25, 30% also, mid and small caps particularly. But the sense one gets here is that at any point in this last 7 months, there has always been a backup buying which has just come up, be it the domestic investors, be it the HNIs, ultra HNIs, family offices. I think there is a lot more appetite for equities, and I know I'll sound cliche when I talk about this, but still you saw a couple of months of even positive FII flows in Feb and March, plus this domestic liquidity, which was so-called, I think mid caps and small caps were already overheated. There was a bit of valuation correction, price correction that happened, which I think was a little healthier because money making was getting a lot easier. So to answer your question, I think that corrective phase where people were scared that this is the end of the rally, probably there'll be a lot more bear market type of behavior that would come into mid small. I don't feel that is the right case in point. I think earnings season is again going to start. There is a lot more appetite. There's a lot more liquidity and sentiment that has returned back to the market. So I'm not feeling bearish at all. I think it's probably the start, or somewhere down the line will be start of a pre-election rally as well.
Pre-election rally is still due. I mean, do you think that there is still some more left in terms of the market rally or recovery?
I think yes, probably as you may say, we are almost on the Nifty and the Sensex. We are touching all-time highs, very close to that at least. And on the mid-cap, small-cap, yes, we'll be a little far away from that. But most of the businesses that I'm seeing have sort of either bounced back Plus, you look at a bit of macros. If I can mention, yesterday the PMI data, the HSBC manufacturing PMI also came at around a 12-year, 13-year high, 16-year high to be precise, and a 33 straight month of positive data points. So I feel the manufacturing, the capex, even the discretionary upper end luxury consumption, all these data points, the GST collection numbers are sort of proving a point, and also global markets have been bit supportive. So I don't see a major carnage. Yes, there has to be certain Six Sigma event which can come in and sort of the market view that sort of I'm trying to give. Otherwise, I don't think there's a huge correction waiting to be on the cards.
Okay. Bajaj Auto 9075. We've got a little bit of profit booking which has kicked in autos already, and that I think is a function of A, the recent rise, and B, auto demand. Bajaj is down, TVS is down, Hero Motor is also down. Naresh, this has been in performing sector, at least the two-wheelers. Is this a decent enough correction in two-wheelers where you should again re-enter them?
Not really. So we've not seen much of a correction in Bajaj Auto from a high of say 9,300. The stock's not even fallen 5% as of now. Similarly, if you were to look at a TVS Motors, the stock has from the top corrected less than 10%, and we recovered back also. So even now the stock is 5-6% away from a top. So out here the moves have been 100% after the breakout. So the only spot where there has not been a similar large move is Hero MotoCorp. So that's a stock that would look interesting on dips even in the current fall in terms of two-wheelers. So that would be a buy around 4,400, 4,500, and that could outperform going forward. So out of the auto pack, as of now, the contra bet is to look at something like an Ashok Leyland, which has gone nowhere, and on dips Maruti, which has been a trending one.
Space which is actually holding out very well today is the entire hotels pack. Just bring up what IHCL has been up to, because that I think has made a fresh record high for itself. EIH is the other one which should just come up for you on your screens. That's Indian Hotels, 615 in trade. Right now it's eased off a little bit, I think, from the top of the day. EIH, Chalet, Lemon Tree, the entire pack should come up for you on your screens right now. Even Asami Hotels, not all of them are holding out well. Lemon Tree, of course, is perked up quite nicely, about a 3.5% uptick coming in there, and then a 1% move coming in on Sami Hotels as well. Naresh, any of these charts looking tradable, something that you could buy even at these levels?
So out of the hotel pack, two names which still look interesting. One is Lemon Tree Hotels, which has not gone up massively. The stock has consolidated between 125 to 145. So once that breaks out, we could see a much bigger move. And the stock used to be 125 back in September. So 6 months of almost no major move. That is one. Second is Royal Orchid Hotels, which is again been sideways for the last almost 1 year. It topped out around 380 back in May of last year. And today also it quotes at around 380 to 400. So that's a stock which could see a further move. So we've seen a massive move happened in Indian Hotels and EIH. So they are out of the list now. But ROH could be the next one.
Okay, point taken. In the meantime, the market has come off a bit. In fact, from those 22,500 levels, there has been a bit of a sell-off in the last 20-30 minutes or so. It's actually moved into the red. What's holding out is Shriram Finance in this kind of market. Remember, there were reports doing around that Warburg Pincus is interested in one of those subsidiaries which the company is looking at divest as well. So that stock is in focus on account of that. But Nestle India is coming under pressure, 2.5% lower. I think one of the brokerages, MK, I believe, had initiated coverage with the reduced rating. So maybe that is having an impact. But what's the view on Shriram Finance, Naresh, and the other NBFCs, if anything, makes it to your list? Maybe Bajaj Finance?
So Shriram Finance is interesting. The stock in the last 2 months has made tops around 2,500, 2,530, almost 4 to 5 times. Today, the stock crossed above those levels. So out there, the structure is positive, wherein it could eventually go towards 2,800 to 2,900 levels. So that's the first one. The next one would be Mahindra and Mahindra Finance, which has been sideways. Has made multiple tops around 300 to 310 over the last 6 to 8 months. If that crosses it, sustains about 300, 310, that would be a strong breakout. It has made a quick recovery from 260 to 300 in the last 6-7 sessions. So these are the two names I'll watch out for.
Right. Okay, let me quickly take it across to Ansh as well. Find out what are the big buggers in trade right now in terms of volume as well as price action. Ansh?
Right. So Hindustan Zinc will be the first stock in focus, as stock has given a breakout from its horizontal resistance zone along with good volume of over 7 times its average trading volume of last 10 sessions, indicating strong participation in today's move. Along with this, aluminium will also be in focus. As you can see in the chart, the stock has given a break from its upward sloping resistance trend line, touching the record high level as well, along with good volume of over 2 times its 10 session average volume. Lastly, Tata Elxsi will be in focus as the stock has given a breakout from its consolidation pattern, which was intact from last 2 months, surpassing above its 200-day moving average. Also, the breakout is backed by good volumes of over 5 times its average trading volume of 5 sessions, indicating good participation. So these are the breakout stocks based on price volume action.
Some of the stocks, yes, big green bars as far as Elxsi and Hindustan Zinc is concerned. So some of those names definitely outperforming in the last few minutes. From the broader markets, Capri Global is up around 17%. Cera Sanitary Ware is up 13%. Infibeam Avenues has seen a good move. Greenlam Industries as well. In fact, Cement Pack as well was perking up yesterday, Devang, on these reports. Probably there's a price hike possibility. Real estate has been doing well. Do you think it's a better way to play the real estate cycle through the building materials, whether cement, durables or other building materials?
I think, yes, very clearly we have been proponents of this proxy play across a lot of sectors. And yes, I'm seeing this in India, probably your building material or home improvement. The theme is more consumption based rather than considering it cyclical. Cement can be a bit of cyclicals because it is affected both by real estate demand as well as infrastructure. But home improvement goes on continuing as we go up in terms of consumption. But yes, to be fair, I think a lot of these paint companies are facing a lot of competition. A lot of this adhesive companies are also facing competition. But in the wake of that, there has been this fast-moving electrical good companies like Havells, Polycab, just giving certain examples, which have done extremely well. There's a company in Cera Sanitary Ware, right? These are also sort of proxy plays to play the real estate cycle, which is doing very well. I think, yes, this is actually an interesting theme along with cement and sort of this type of home improvement as a theme, which also has probably cement has done, but most of these businesses are somewhere far away from their lifetime highs. So I think there's still a lot of scope for these businesses to do very well as we into this new year and we see capex as well as discretionary consumption moving up.
Right, okay, that's the take coming in on where some of the sectors are headed. Just closing in on trade, and still it's Laurus Labs which is holding up well. PNB has, by the way, shot up. If we can just bring up the intraday graph of that stock, because that's really on a tear, and the perk up has really come in just the last 1 hour or so. 7.25% of an up move coming in on the futures. There's Manappuram, which is looking very smart indeed, and then GNFC as well, which has made quite a decent move. Naresh, just scout the charts for PNB. This is a sudden shoot up that you're seeing on the stock.
Yeah, so, sharp turn in momentum across the PSU banking space. If we look at PNB, the last high for the stock was 133 to 133.50. That was the high it made, and that is being taken out right now. We are at 135 levels. Similarly, Canara Bank has also crossed above the levels of 600, 602. So it's a fresh breakout move across the PSU banking space. At current levels, the Bank of India, Canara Bank still look interesting. PNB would wait for a dip, but the breakout was clear across the board.
The word coming in on PNB and some of these other public sector banks, which are clearly doing quite well despite the market coming off a bit. But IT too has been one pack. Devang, what's the view? Given the low expectations, what's the probability that the IT companies might surprise with their earnings come next week?
I think, yes, the last quarterly numbers which we saw had a bit of green shoots, not only in terms of numbers and guidance, but also the management was more sort of forthright in saying that was seemed to be over. And I think given the valuations of these stocks which had come out from, say, 40, 35, 40 types of P to most of these companies coming under sub 20. Now, of course, the valuations have sort of again started to rise. I think both the large cap IT companies and mid cap IT companies are good choices if somebody probably has at least 2.5 year horizon, because we seem to see that a lot of this US and European nations are sort of coming out of the woods for some reason. I think we also seen the data points across these economies at least improving a tad bit. My sense is that these are sort of contra-bias, though we are more, as I said, we favor more of domestic plays or more of the local economy facing plays, but these are good themes. Some IT companies, some pharma companies. We have seen also mid-cap IT coming to the fore. A lot of ER&D companies, a lot of tech companies, and a lot of Indian IT companies, also sort of mid-cap IT companies have come back to the fore. So I think it's interesting. Yes, results we will monitor a little more closely and take a proper structural trend. But yes, somebody wishing to be here for 1.5 to 2 years seems to be a good sector to sort of get into.
Vistara, that's where all the action has been. And the CEO, Vinod Kannan, today, along with the HR personnel and other senior officials, virtually met all the pilots regarding the issue of compensation. Remember, since the start of this week, nearly 100 flights have already been cancelled because of the absence of pilots and other crew-related issues. Let me take it across to my colleague Sumit Chaturvedi and take stock of what exactly happened in that meeting.
With the trouble continuing for owned Vistara Airlines, its CEO Vinod Kannan today met the pilots in the afternoon. The talks were centered around the concerns of the pilots. Well, the salary structure was not discussed in detail. Sources tell us that roster and network planning was discussed in detail. Airline management told pilots the issues from the last few days are coming because the pilots are spread very thin, and rostering issues will be taken care of. There are concerns about the roster of pilots. That was something which was discussed. Salary was not taken up in that big a manner as was expected. We all know that Air India is impending a merger with Vistara. Both the Tata Group owned airlines, and some of the pilots had reported sick. So Vistara said that the flights have been affected because of unavailability of crew. The flights were affected from the last many days, 50 to 60 flights per day. But today, the number of flights impacted has come down. Yesterday, Civil Aviation Ministry and DGCA also stepped into the whole issue and tried to ask or work in favor of customers, asking Vistara what are they doing so that there's a minimum inconvenience caused to customers. But in the whole thing, now today's meeting is quite important because airline management has tried to address the concerns of pilots today.
Okay, so that's about Vistara, but in the meantime, let's take the BTSE trades as well from our chartist. Kunal, you go first.
So I'll suggest two buy calls. The first one is about Poonawalla FinCorp. That's a chart which has started to look very attractive, coming out of a bullish pennant formation on the daily time frame. So buy with a target of 540, stop loss at 470, and Granules is something which is also coming up in terms of a breakout mode. So would suggest a buy targets of 470, stop loss remains at 433.
Yeah, Granules, Loris, a couple of these actually pharma names are perking up on the radar. But Naresh, what about you? What are the BTSE or STBT trades?
So two banking names, one small cap Bank of India, which has seen good momentum today, could see follow up tomorrow. Stop loss at 141, target price of 148 to 150. Second is a buy on Axis Bank, which has shown a reversal candle today. Stop loss at 1055, target price of 1100.
That's really, Okay. Devang, just before we let you go, just wanted to understand what is it that your preferences are within the large cap universe, other than the stocks and sectors that you've talked about.
I think yes, on the large cap side, we clearly favor, as I said, the luxury, the discretionary consumption side, where you were talking about hotels, and I was sort of ready to go on hotels. We sort of like this sector, particularly companies like Indian Hotels, companies like EIH. Now the average room rates for most of the companies have sort of gone up. The operational efficiencies have come to the fore. Operating leverage has come to the fore. Very importantly, most of these companies now operate on a model where they manage these hotels rather than doing a lot of expansion on the capex front. So debt for most of these companies have also come down. I think clearly the religious tourism, the inbound tourism that India is right now seeing, the activities in terms of even convention centers being set up across cities will boost this. The demand is clearly growing more than the supply. And I think that demand-supply mismatch will continue for some time to come. So I think this as an industry, a couple of large and couple of mid-caps, we sort of
let you go on that note. Thanks as always for taking the time and joining in. Just winding up for the day, we'll let Kunal and Naresh go as well. Let me hand it over to Vinny for the closing trades.
So absolutely, it seems like today we are ending on a bit of a subduedness for the Nifty as of now. And yes, Nifty managing to close about the 22,400 levels. What did well today was the Nifty mid as well as the Nifty small cap. The outperformance continues for the Nifty mid and the small cap, up more than 1%. Both these stocks, both these indices. Other than that, what's not doing well is when you look at it, we don't have Nifty Auto as well as Nifty Realty participating in trade today. Well as Nifty FMCG not doing anything great there as well. Nifty FMCG are subduedness because we did have a report that came in from MK on Nestle where they initiated coverage with a reduced rating. So Nestle clearly among the top losers in the Nifty 50 as well, down almost 2.5%. Let's pull up the PSU banks. Nifty PSU Bank today is the top sectoral gainer. So we do have PNB, Canara Bank, UCO Bank, Bank of India. All of them seeing some bit of a gain there, as well as SBI managing to hold on to almost 0.5% gain. Now, when I'm talking about the Nifty 50 today, what is happening there is while IT did well, that we had TCS, Infosys, HCL Tech, which managed to give some pull to the Nifty 50. On the other hand, we had Reliance Industries, which is a heavyweight that saw a decline today in trade, and Reliance Industries is almost 1% in trade when you look at it, and closing around 1% downtick than we can see on Reliance as well. Other than that, to pull up Kotak Bank, that saw a bit of a drag as well, and ICICI Bank too seeing a decline in trade. Some of the individual moves that we should highlight today is in terms of overall the metals. So Nalco, SAIL as well as Hinzing in the metal pack saw a bit of an up move on that front. We had data points that came in from China, keeping all the metal stocks in focus. We had fundraising plans that came in from JSW Energy, Chalet Hotels as well as Indiabulls Real Estate, keeping those stocks on the radar. JSW Energy managing to close on with strong gains of 7%. Chalet Hotels on the other hand, a bit of a subduedness that it will be closing the day with, as well as Indiabulls Real Estate closing with gains of more than 1.4%. Let's pull up what some of these IT names did specifically, because TCS, Infosys, HCL Tech, like I was mentioning, they are seeing a good gain. We did have a brokerage note that came in from CLSA, positive note, and that kept all these stocks abuzz. Lastly, defense names, shipbuilding names specifically seeing a very good up move today. So Cochin Shipyard, Garden Reach as well as Masgao Dock seeing very, very strong gains. Look at the gains that we are seeing and closing the day. Masgao Dock 11-12% uptick intraday as well, and that's how the day is closing like. When you look at it in terms of the Nifty 50 as well as the benchmark indices, nothing exciting. A muted day is what it is going to be closing at. Managed to reach somewhere near those all-time high levels, but then closing the day in the mid-range of 0.04% downtick for the Nifty 50. Sensex down, closing absolutely as flat as it could be.
If you like this video, then like, share and subscribe to ET Now.